Did you know that technical analysis is the core foundation of every single trading strategy and concept there is? Now, in today's video, I'm going to be giving you the core secrets or the pure, simple basics that you can do to master technical analysis and improve your trading on the go. Let's get right into it. Now, the core principles in mastering technical analysis are embedded in time frame, coordination, and market structure. Other than that, let us dive straight into the charts and see how best we can use that tool to navigate the financial markets. Now, coming onto our charts, the first thing you want to pay attention to or to learn is market structure. Now, as you all know, when you're buying and selling commodities, the prices are either going high, going low, or they are moving within a specific price range. Now, we classify those three different kinds into structures. And when it's going up, we say it's bullish. When it's going down, it's bearish or in a downtrend. And when it's moving between specific price ranges, say it to be a consolidation. Now, what would that look like on our charts? Now, we spoke of a period when price is going to the upside, and we call that an uptrend or a bullish move. Now, you need to keep in mind that the market doesn't go straight all the way up. No, it has periods where it will go up, then return down, go up, then return down. And it will look something like this. It will move up, come down, move up, come down, and move up. Now, technically what price is doing, it is forming what we call structures. And these structures, we tend to label them to give us the characteristics of any given trend. Now, in this particular illustration, price comes from the point of origin that is low, and we shall call this a low. Then it will form a high. Now, when it continues moving upwards, this period where price comes back down, it's called a retracement. Price is trying to retrace and to form a new low, and then it will go ahead and form a new high. Now, this high that it forms, because it's higher than the previous high, that's right over here, we shall name this the higher high. And then the new low that it forms will be called the higher low. Now, when price is doing this, it's forming a series of structures, and we tend to say that it's forming higher highs and higher lows, henceforth causing a bullish move or an uptrend. So now the characteristics of an uptrend are simply price forms a sequence of higher highs and higher lows. Now, when it comes to the downtrend, the reverse is exactly true. Price will come from the origin, that in this case will come from up over here to form a low, then a high, then a low, then a high, then a low. Now, in this series or this scenario, we say that price is forming lower lows. Now, it's another low. It's forming lower lows, and then it's forming lower highs. Now, this is a lower high because it's lower than the previous high that we had at the origin right over here. So now when it comes to this side, we shall say that in a downtrend or in a bearish market, price is forming a series of lower lows and lower highs. Now, we spoke about the range or the consolidation or the period of time when price is moving between two specific price points. Now, we could have a point A over here and a point B. So when price tends to come to point A, it reverses down to the point B. When it reaches point B, it reverses down to point A. Then it comes back to point B. And it's just moving within these two specific price points. Now, this period is called a consolidation or a range because price is moving between a specific range of prices. The market is just in between there. It's compacted. So we tend to call that a consolidation or a ranging market. Now, when you've had these two ideologies, we want to see how we get them and put them on the chart. Now, do not forget that we say that understanding market structure and then time frames. Now, on the charts is where we're going to see how the time frames come in to make that interplay or that connection with the structure to give you the A-class kind of technical analysis. Now, when we come to our MT5 charts, remember in the first video, we spoke about the time frames. You know, these things that are up here on the top of your chart with the M1, M5, you know, the H1 and the MN. Now, those are called time frames. Now, remember we said that when I switch from that D1, that's a daily time frame, to the H4, that means that on the H4, every single candlestick is representing data that happened within 4 hours, or the number of buyers and sellers within those 4 hours. When I go to the day one, it's showing me the number of buyers and sellers, or the way they traded. Were they mostly bullish? Were they mostly bearish? So what does that mean? That means that every single time frame will give you a different kind of structure. Now, just to pick your mind on something, remember we have different types of traders, and that's why we have different types of time frames. So we have what they call swing traders. Now, what swing traders do is that they hold trades over a long period of time. Now, they'll probably be on the weekly, the monthly, and sometimes the daily time frame. That means for a structure to form, you have to wait for a couple of days. Because when you look at your daily chart, so we call this the daily chart, when you look at it, all these candlesticks here represent trading information or data on this particular commodity within a single day. So that means for a structure to form, for you to get an entry, you'd have to wait for a couple of days. Now that would be a swing trader. Then we have what they call the day traders. Now a day trader, you tend to hold your trade for most of the day, or it could be a market session or a couple of hours. So what would you do if you're a day trader? You go down to a lower time frame, such have the price data or the transaction happening within a day, such can get the right opportunities to be able to capitalize on. Then now we have the third type of traders. Now these are called intraday traders, and most times we tend to classify them as scalpers because they are in and out of trades throughout the day and they don't hold their trades for a very long period of time. And you will tend to find those on the very low time frames, probably the 15-minute time frame, the 5-minute time frame, and all that. So now down to how we're going to use this in terms of technical analysis. So now that we have seen the illustrations and what these trends tend to look like, let's go down and see how to identify them on the chart. Now with technical analysis, remember I told you we are going to be using a market structure, time frames, and of course our technical tools that we use to read price action. Now by price action, I basically mean that data represented to you by the candlesticks. So now when you come down on your chart, you realize we have a section up here that has kind of like a vertical line, a horizontal line, and then a trend line. Now these are tools, or we tend to call them technical tools that aid you to read price action. Then of course we have our time frames. So now what we are going to do, we have this tool called the trend line. Now the trend line is going to always help us to determine the trend we are in or the market structure we are in. Take for example, I can see that this move started from all the way down here and it's going all the way to the upside, right? But you're going to notice something peculiar from what we just learned. If this was our low point, price came and formed a high right over here, then it formed a low, then it went ahead and formed another high. And what is price forming? Probably higher highs and higher lows. Now you can determine that the structure we are in is probably and definitely bullish. So you are in an uptrend. Now that's how you can tend to use a trend line. Now let's look at what happened on the price action before by this. So when you scroll to the left hand side, you can use still the same trend line to try and determine what price was doing. Price was moving to the downside. And you can see what happened here. Price had a high, formed a low, formed a high, formed another low, then consequently formed more lows going to the downside. Now we can use the trend line to determine what trend we are in at any given period of time within the charts. Now, there is a number of tools that you can always use to try and determine the trend. You can use structure points, you can use the trend line, but it's a guiding tool. Now, we shall not be taking our trends entirely based on the trend line, no. We are going to add a few different things and a few different concepts that can as well be able to add to your concept to be able to come and determine the right trends. So let's look at a few more examples on how the trend line can be used to determine trends. So let's have a look at this. When price was moving over here to the upside, you can see price forms a low, a high, a low, a high. And price, you can see from here, it kept moving to the upside as it was going along the trend line. Now, it's always very, very important for people tend to like to use the trend line to try and see how many possible touches you can have. Now, the simple trick I tend to use is this. When I come to a given piece of price action or to a chart, always determine the highest point price has formed and then make sure it has a second point it has definitely touched. For this example, I have this touch over here. You can as well put on the candlestick body, and then you want it to must have had at least a third touch on the trend line. Now, when that happens, you'll anticipate that price has now given you bearish conditions. And what do you want? You want price to come and gravitate towards that area or possibly give you a third touch. Now, remember, sometimes price will gravitate towards key areas within or near the trend line. It's not always a must that price will have to touch that trend line. But this is a simple guiding factor that you can see. And when you draw this all along your chart, you can see this happening out. One touch, two touches, and the third touch will always provide you a possible entry or a good trade idea from which you can capitalize. Now we can see that we have a one touch, a second touch, or you have this as a second touch as well, then a third touch, and boom, you have your nice trade, nice and easy. So now that's the first tool we are going to use. Then the other tool we shall use will be the horizontal line. The horizontal line. Now, what's the horizontal line and what does it help you determine? Now, when price is forming higher highs and higher lows, always creating areas that price goes above. Now, the other tool we are going to be using is the concept of support and resistance. Now, let's just have a quick idea of what support and resistance is. Now, when I speak of support basically means a line, and of course at the bottom, right? And whenever price is moving in the market, it comes and then it bounces off. Comes, then it bounces off and bouncing to the upside. So support is a level that prevents price from going lower, or you could call it a price floor. When price coming from upwards, reach a certain price level or a certain zone, and it goes up. So we call that a support level. Then on the other side, we have what they call a resistance or a resisting price. So what's a resisting price? This is an area that prevents price from going higher. So you could call it a price ceiling. And that's a simple way you can tend to understand it. Price resistance, the price ceiling. Price fails to go above. Then support, price fails to go below. Now, the other idea behind this is this. At a certain point in case, price will be able to break below the support level. Now, when price breaks below the support level, it now turns, this support level becomes a resistance level. Then when price breaks above the resistance level, this former resistance will now become a support level. Now, where is that very crucial? Now, let's get down to try to align this together with our idea of market structure. Now, let's say price is forming higher highs and higher lows, higher highs and higher lows. Now, remember we did say this is an uptrend, right? So if this is an uptrend, what is price doing? When price turns from up over here or forms a high, that means price formed a resistance somewhere around there. This was a resistance. Remember, I've just told you that when price breaks a resistance level, the former resistance level now becomes a support level. So now when price breaks the resistance, becomes a support. If price now forms a high, remember we are in an uptrend. So price is breaking the previous high to form a new high. So in simple terms, every time price breaks the previous high, that means it breaks a resistance level. And that resistance now becomes our new support. And in the downtrend, the reverse is exactly true. If price is forming lower lows and lower highs, that means where price formed a low, there was a support level, but price broke below it. And price breaks below the support level, it now becomes a resistance level. And that it continues, it goes on and on and on and on. Now, we're going to try to align this together with our structures and then our trend line and see what tools you can add on to simply understand the basics of technical analysis. Now, another secret that I should let you know, or that you need to actually know, is that a trend line is a support and resistance level, just that it's slanting, right? So of course, in a bearish market, we have a slanting resistance, a bearish trend line, right? In an uptrend or in a bullish market, we have a slanting support level, and that is a bullish support level. So now let's go back to the chart and see how are we going to combine these two, the tools we have seen and market structure, to try and be able to capitalize and understand the structure in depth. Now, getting back onto our charts, we have just seen at a few of these examples and how they're actually acting. Now, why do you call this support and resistance levels? So when price comes and forms an origin point, as you saw up above here, comes and forms a low, then rejects this level. Now, remember this was a high. Remember we said that this is a slanting resistance level, right? So when price comes and rejects this level or bounces off this level for the second time, you're at least sure that when price comes to it a third time, it's possibly going to give you some kind of reaction, right? But remember we said that price can also break that level, but price is most definitely going to give you some kind of reaction at this level here. So what happens? You expect that the third time price comes, it is going to reject or bounce off that level. First, we had a level over here and we had another level rejecting that same price level. Now that becomes a slanting, a resistance for the case of a downtrend. And in the case of an uptrend, the case will be exactly the same. We had a level at the origin, price comes and rejects it the second time. So what are you expecting? The third time is our best time and it's the one you want to capitalize on the most. So now when price comes the third time, it just barely taps on the trend line and it bounces up to the upside. And when you look at the other example over here, we have the origin, then we have the touch where price comes to this level here. Then what happens next? Price gravitates back towards the trend line and rejects it and it falls all the way down to the downside. So now That's another ideology we are going to be using. Now, this is the support and resistance level. But now, sometimes you won't be able to capitalize entirely on such levels. What levels are you going to look for then? You're going to look for levels where price forms support and resistance levels. Let's say, for example, so now we are going to use what you call the box tool, right? To look at support and resistance levels. Now, after determining your trend, you know that there are going to be areas where price is going to break out of highs and break out of lows, and it's going to come back and respect those levels. And we call that a retest. Now let's look at some examples of retests happening over here. So now here price comes, gives us a second touch, and it goes to the upside. Now when you're marking the support and resistance levels, you're going to look for areas where price has broken out or rejected multiple times. Take for example, we can have one level drawn right around here. So now here what I'm focusing on, we're seeing price rejected this level, broke below it, respected it. Came back again, gave us this rejection, then broke above it and retested this level and continued. Now, you're going to just try to add a few of these concepts together. Now, we have our trend line and we have had our second reaction. As we said, we want it to have at least 2 minimum touches, and you want to look for a trade on your third touch, or you want to capitalize on the third touch. And this third area here aligns with its, our level that was support and resistance, because we can see that here it was resistance, price broke above, became support, price respected it, broke below, price tried to respect it over here, as you can see, then price broke above. And then why would you wait for this? You have a support level and you have a trend line, which is also a slanting support level. And what else do you have? You have price forming higher highs and higher lows, because price came and formed a 1 point, 2 points, 3 points, and then the fourth point. So you want to enter on this. So you could name this usually called the ABCD pattern. So you want price to give you 4 structure points. Now let's illustrate on that. The easiest way of understanding structure is by, we can use this narrative or the logic of the ABCD pattern. What do I mean by the ABCD pattern? So I remember I said that when the price is forming highs and lows, it's forming structures. So we said the characteristic of an uptrend, for example, price should form a higher highs and higher lows. So if price give me a low, then give me a high, let's give me a higher low, let's give me a higher high. Now you need at least 4 structure points to determine a trend. Now, what will you name this as? This would be our A, our B, our C, and then our D point. So we call this the ABCD pattern. Now, you can always use that to try and understand structure in a more simple way, or in a simplified way. Now, what do you notice when price? If you draw a trend line on this structure, would have this area and this area. And what would you see? You would see that you actually have, let's just have it this way. So you would have your A point, your B point, your C point, and your D point. So when you draw your trend line, it would look something like this. And what do you see? 1 touch, 2 touches, just like we're looking for on the chart. But what else do you see? Price forms a low, a high, a higher low, and a higher high. So you have 4 structure points, or in simple terms, you have characteristics or an uptrend. So you will be looking to take your trade on the third area, but you won't take your trade entirely based off your trend line. Now, back to the example we're looking at. Now here, we know that price gave us the A point, the B point, the C point, and the D point right over here. So now you're looking to take your trade when price gravitates back toward the trend line. But now what have we seen here? We have a support level, because it was a support, resistance, and price has been rejecting it multiple times. Now, what are you doing? You are confluencing 2 different concepts to try and see how best you can formulate a trade in this given area, or you could call it your area of interest as well. So now, going back to another example, let's look at this as well. We have 1 touch, 2 touches, then a possible third touch you're waiting for. So what are you going to look for? Support and resistance levels. So let's look around that area and say, was there anything that price could have definitely respected? So when you look to your far left, you can see that there are these levels over here that price was rejecting multiple times. Price had a high here, that means there was a resistance level. Price rejects it, price rejects it, then it breaks above it, becomes support. Price comes, tries to bounce above it, then later it breaks below it, becomes a resistance. Now this resistance level is within the area of your trend line. Remember, I told you it doesn't have to touch the trend line. It just needs to gravitate within the areas or towards the trend line. And remember, support and resistance are not specific price levels. There are a range of prices. And that is something that you want to keep in your mind every single time. Now, we can do this time and again, and you'll keep seeing the same type of narrative all through the markets. So just one more example, and we see how this works on from here. So you can see that we have one touch and two touches over here. Then what are you going to look for? Any support and resistance levels that are within the same level of our trend line. And what do we see? We have this level, we have a rejection here, we have a rejection here, price breaks above it, we have a rejection, and now it's coming in toward our third trend line touch. Now, for starters, we are going to be using this just to determine structure and trend. Then now, after having this on your high time frame, for example, on the daily, we won't be taking our trades on the daily time frame. For example, most people are day traders or intraday traders. Now, when you come down to the entry models and the refinements, we are going to look on how we are going to incorporate the lower time frame. Right now, what we have done is we have built an ideology, or you've got the bigger picture. So the next thing you want to do is go down and see what the lower time frames are doing in relation to the high time frames. So in the next video, we shall be discussing entry models and refinements and how we are going to be aligning time frames to our structures. So other than that, if you found this video educative, comment, like, subscribe, and don't forget to share with a friend. Watch this video over here if you want to learn more about trading.